Okay, we did get down to our 35 to 37 area. Took a while, but just really good trading today. First, I'd like to recap this morning. We wanted to sell 59s to 60s, if possible. But we said it might take a 55, 57 to get in. So right here is a retest failure trade. The high of the market was 55.50, and the market did trade down to 47 for a nice trade off of our retest failure. You would have had a sell stop. You'd have been short in the 53 area. So you had a shot at upwards of 5 handles, depending on how you got in and how you got out. The market did rally back up, and this was our second run at 55.57 with a high of 57 and a quarter, 57.50, which was our sell zone. And if you did not sell stop in the market when you took out that single bar right there, then sell stopping into the market when you took out that little 2-bar low there would have had you short in the 52 area. The market makes a new low, so you can stay, you're still trading from the short side. Here's another setup that we like, our retest failure trade. So you sell stop into the market right here. We make another new low, so we're still only interested in the short side of the market. Another retest failure trade here. And the market breaks and makes a new low. Another retest failure trade right there. And so on and so forth. And finally, to the last low, we get another retest failure here. Then lo and behold, in our number 2 buy area, 35 to 37, we've got a retest here. Our trading target starting out this morning was 41.5 to 37. And if you'd managed to stick around for that trade, there was 15 handles or more for you on that particular trade. So the trading in the E-mini turned out about as well as one could expect. And that's what we like to see. Yes, Neil, I will head for the gold chart and go over that with you. So anyway, taking a look, now when we started out this morning, we said that second day of selling was really important in the E-mini, and it gave us a shot for 12 to 17 days down. And I want to quickly review that. So we're playing for a huge potential trade here. Now, a bull market correction is 50 to 70 points. It's really hard for me to believe that we're in a bull market right now, even though we just did make a new contract high. But if you take a look at these two occurrences last year, you can see that we had selling that went 12 to 15 days there, and here we had selling that went 12 to 17 days. And the key was getting the second day of follow-through selling, which we've gotten. And so we'll keep, we like the short side. Got this low at 1825, then we have this low at 1815 that we'll be looking to test, and there's a break in the volume, I believe, at 1813. So this market is pointed lower and stops below 25 before the selling is over is the minimum that I would expect. So looking at, we got a lower high and a lower low today. That means on the F1 screen, the market is pointed lower. And on the F2 screen, we'll go take a look at that. If they're in agreement, we've got ourselves confirmation that the market is headed lower. And we had a double distribution down. So this 45 level, 45 to 47 is potential resistance. Then our 50 area would be R2. And then our 55 to 57 would be R3. And if we assume a close right here, we want to sell failure at 45, 47. Now we'll make it 47 to 50 if we close here at 45. That'll cover us pretty well. And the bottom of value is 38, so our first buy would be in this 35, 37, pretty much where our number 2 buy was today. And then we'll make our buy 2 at 30. So that's it for the EMini. Okay, we started out this morning in the note. We wanted to be long. We hope to buy 17s to 21s. The low was 22, 22 and a half. And so the market was stronger than I thought it was. We wanted to be long as the EMini was selling. The EMini cooperated and sold. It wasn't too difficult a trade to see nor to call, but a lot of people don't like to pay up to get into a market. And what you have to understand is if you have to pay up to get into a market in this type of situation, it's stronger than you thought it was. And pay up and get in. Market stopped at 24, so you can see we have a very, very strong market to the upside. We can sell failure to get through 24, or we can certainly buy into weakness, and this screen suggests we should be buyers. And if that is confirmed on the F2, we'll look to get long first. Now tomorrow, there's really not much news to speak of this week, so we'll be looking to China and Europe for the news. Tomorrow's news is JOLTS, and it was 3.974, which are open job openings, unfilled job openings, which can be used as a surrogate for unemployment or a pulse for how strong the economy is. Right here we have a move up, definitely a P, so it supports higher prices. We've got pretty good support here at 26.5, so 24, 26.5 will be your first support band. 20, 22 will be your 21.5 will be your second support area, and then basically 16 plus or minus. On the sell side, if we can't get through 24, we can sell failure to take out 124 even. I mean, it's a pretty easy trade. No news to drive the trading, so again, the focus is going to be on the direction of the EMini. Okay, looking on the buy side, we've got pretty good support at 24, 26.5, maybe come down and get stops just beneath that. So buying 26s will lean against this high. The last rotate down was 22, so 22 to 26 for buy one. And then we have this little K break over here at 18, and we had the breakout from like 16. So we'll make our second buy 14 to 18. And we'll see how that shakes out. Looking at the bond, and once you learn how to trade the 10-year, the bond has got a little over twice the volatility. Sometimes a little less, but pretty much 2 to 1. And you can take your setups off the 10-year or take your setups off the 30-year, but you need to get over to the bond. It's a great contract, 31.25 a tick. and you can make some really, really good money. In fact, last fall it was a lot easier to make money in the bond than it was in the EMini, when the EMini pretty well died. We're going to sell failure to take out 33.20 to 24. On the buy side, we had a breakout from 06, so we'll make 4 to 8 as a potential buy area. The last rotate down was 13, so we're really in a dilemma right here. Let's make it 13 to 9 for buy 1, and then we'll make it the buck to 04 for buy 2. Okay, after I get done with this update, Neil, we'll go back and we'll look at the F4 screens for crude oil and for gold. I'm under a time constraint right here, so need to keep moving right along. Okay, looking at the F2 screen, both gold and crude came off today, so the perception of a crisis in the Ukraine is diminishing. But it's always there, so you might see more of the effect in gold than you will out of crude. You could just hint at war and crude will go up. But we've got this pretty clean break at 95, and we've got volume down at 92.40. So we'll make 92, 95, buy 1. And on the assumption that we can come down, if we can't get below 95, we're going to have to pay up. We might be back to our 95, 97 where we were. And then we had this breakout down here from 88, so we'll make 88 to 90 for buy 2. And we've rejected prices today above 02, so we'll make 2 to 5, sell 1. And then 7.5 to 10 for sell 2. And crude, buyers at 100, sellers at 101 plus. Now that's math an ex-local could do, right? And our number 2 sell zone, which is 101, 101 and a quarter, held. And we had hoped to buy below 100. But our number list started out this morning, crude, we had a buy at 100 plus or minus was our number 1 buy. So number 2 sell to number 1 buy, and that's the way that it works. We're kind of in the middle, so I'd say that 100 to 100 and a quarter is buy 1. And then 50 to 75 will be buy 2. Okay, I saw another article today on increased production. Libya said it was okay to open the spigots and start their move up from 250,000 barrels a day to their pre-war of 1.5 million barrels per day. So again, we're put in a situation where supply is going up, and normally that would take crude down unless, one, the economy is growing stronger than anybody thinks, or two, the shooting's going to heat up once again somewhere in the Middle East or in Russia, Ukraine. Okay, in the United States, we usually have about 2 days a week where we can get something out of the euro. And today wasn't one of those. Usually you're on London time if you're going to trade the euro. But It is a part of the interest rate formulation. The most basic cost to any business is the cost of money. The second most basic cost or input for any business is the cost of energy. And the euro reflects that. The euro can make it cheaper or more expensive. We'll make 50 plus or minus cell 1, and then 75 plus or minus for cell 2. On the buy side, we stopped at a quarter this morning. We're currently at 39. So we'll make 37.15 to the buck buy 1. It's just, and again, probably to a fault, it's really hard for me to get excited about being long the euro for more than an hour or two. And that's I'm influenced by the fundamentals, and probably to a fault at times. But you get your head handed to you on the short side usually, unless Draghi picks up the mic, and then that usually yields a whipsaw, which sets up a great short. Okay, that's all I have right now for this. Let me stop the recording.